Hello, everyone. Welcome to the weekly lecture videos of PSCC 6003 Corporate Finance. This is Dr. Lutfur Rahman, your course coordinator. You may be aware that this week's topic is Introduction to Financial Management, and we are covering Chapter 1 of your textbook. I have divided this chapter into 4 learning objectives, and I will be uploading one video for each of the learning objectives. So in this video, I'm going to discuss the basic types of financial management decisions and the role of the financial manager. So first of all, traditionally, financial topics are grouped into 4 main areas, right? So these are corporate finance. These are corporate finance or business finance, investments, financial institutions, and international finance. The first of these 4 areas you notice is corporate finance, which is the main subject of this book. Okay. One thing we will note that the term corporate finance seems to imply that what we cover is relevant only to corporations, but the truth is that almost all of the topics we consider are much broader than that. Maybe business finance would be a little more descriptive, but even that is too narrow because at least half of the subjects we will learn will be really our basic financial ideas and principles that are applicable across the various areas of finance and beyond. Investments, broadly speaking, the investments areas deal with financial assets such as shares and debt. And some of the more important questions to consider here include what determines the price of financial asset, such as share, what are the potential risks and rewards associated with investing in financial assets, and what is the best mixture of different types of financial assets to hold. Okay, so students who will be specializing in investments will have various career opportunities, such as a stockbroker, a portfolio manager, security analyst, and so on. Financial institutions are basically businesses that deal primarily in financial matters. Banks and insurance companies would probably be the most familiar to you. Institutions such as these employ people to perform a wide variety of finance-related tasks. For example, a commercial loan officer at a bank would evaluate whether a particular business has a strong enough financial position to warrant extending them a loan. And job opportunities in these areas are like client advisor, credit analyst, and loan officer, as I already discussed. International finance is not so much an area as it is a specialization within one of the main areas we already described above. In other words, careers in international finance generally involve international aspects of corporate finance or investments or financial institutions. For example, some portfolio managers and security analysts specialize in non-Australian companies, right? Similarly, a growing number of Australian businesses have extensive overseas operations and need employees familiar with such international topics as exchange rates and political risk, okay? So job opportunities in these lines is international portfolio manager, international security analyst. Okay, so these are the major finance topics or finance areas. Okay, now let's discuss very briefly that why we study finance. Well, in two words, you do study finance because you will be needing finance knowledge to pursue a career in finance. Okay. So, for example, if you are interested in marketing, you need to know finance because marketers constantly work with budgets and they need to understand how to get the greatest payoff from marketing expenditure and programs, right? Um, if you are an accountant, for example, accountants, a detailed understanding of finance is a necessity. In smaller businesses in particular, accountants are often required to make financial decisions as well as perform traditional accounting duties. Further, as the financial world continues to grow more complex, accountants have to know finance to understand the implications of many of the newer types of financial contracts and the impact they have on financial statements. Financial analysts, on the other hand, make extensive use of accounting information, um, and understanding finance helps accountants recognize what types of information are particularly valuable and more generally how accounting information is actually used in practice. One of the most important areas in management is strategy, right? Thinking about business strategy without simultaneously thinking about financial strategy is an excellent recipe for disaster. As a result, management strategists must have a clear understanding of the financial implications of business plans, right? In broader terms, management employees of all types are expected to have a stronger understanding of how their jobs affect profitability, and they are also expected to be able to work within their areas to improve profitability. Okay, and last of all, perhaps the most important reason to know finance is that you will have to make financial decisions that you will that will be very important to you personally, right? Today, for example, when you go to work for almost any type of company, you will be asked to decide how you want the contributions to your superannuation fund to be invested. Okay, we will see later in a chapter that what you choose to do can make an enormous difference, enormous difference to your future financial well-being, right? On a different note, is it your dream to start your own business? Good luck if you did not understand basic finance before you start. You will end up learning it the hard way. Want to know how big your HEX payments are going to be before you decide to pay upfront or pay them off through tax? Maybe not, but we will show you how you calculate them anyway. Okay, so these are just a few of the ways that finance will affect your personal and business lives. What you want to or not, you are going to have to examine and understand financial issues, and you are going to have to make financial decisions. We want you to do it wisely. So keep reading and keep learning. Okay, the next we are going to discuss is business finance. So what is business finance? Imagine you were to start your own business. No matter what type of business you started, you would have to answer three basic questions, right? For example, what long-term investment should you take on? That is, what lines of business you will be in and what sorts of buildings, machineries, and equipment you will need. Okay, that's the first one. Second one is, where will you get the long-term financing to pay for your investment? Will you retain some profits for reinvestment, bring in other owners, or borrow the money? How will you manage your everyday financial activities, such as collecting payment from customers and paying suppliers. These are not the only questions, but they are among the most important ones. Business finance, broadly speaking, is the study of ways to answer these questions. Okay, so we will be looking at each of them in chapters ahead in the coming weeks. Okay, now financial manager. The financial management function is usually associated with a senior position within the firm, often titled the Chief Financial Officer, CFO, or Vice President of Finance. Okay, and top financial manager in a firm usually is a treasurer that oversees cash management, credit management, capital expenditure, and financial planning. And there are also finance professionals in a firm. Those are accountant, like overseas taxes, cost accounting, financial accounting, and data processing. Now, some financial management decisions. First of all is capital budgeting. The first question concerns the firm's long-term investment is capital budgeting. The process of planning and managing a firm's long-term investment is called capital budgeting. Okay, so in capital budgeting, the financial manager tries to identify investment opportunities that are worth more to the firm than they cost to acquire. Okay, so loosely speaking, this means the value of the cash flow generated by a project exceeds the cost of undertaking the project. Okay, so regardless of the specific investment project under consideration, financial managers must be concerned with how much cash they expect to receive, when they expect to receive it, and how likely they are to receive it. So evaluating the size, timing, and risk of future cash flows is the essence of capital budgeting. And the next one is capital structure. So this is the second question that financial manager concerns how the firm obtains the financing it needs to support its long-term investment. Okay, so a firm's capital structure, we often call it financial structure, refers to the specific mixture of non-current debt and equity the firm uses to finance its operation. The financial manager has two concerns in this area. First one is how much should the firm raise? And second, what are the least expensive source of funds for the firm? Okay. So in addition to deciding on the financing mix, the financial manager has to decide exactly how and where to raise the money. The expenses associated with raising long-term financing can be considerable, so different possibilities must be carefully evaluated. So one possible source of funds is retained earnings, which raise the question of what dividends to pay to shareholders. If the business is to raise funds externally, then they can come in a variety of forms from a large number of potential suppliers. For example, banks, individual investors, lending money through investing in bonds. Choosing among these suppliers among funding types is another job handled by the financial manager. The third question concerns a financial manager is working capital management. The term working capital refers to a firm's current asset, such as inventory, and its current liabilities, such as money owed to suppliers. Managing the firm's working capital is a day-to-day activity that ensures the firm has sufficient resources to continue its operations and avoid costly interruptions. This involves a number of activities related to firm's receipts and disbursement of cash. Some questions about working capital management that must be answered are: how much cash and inventory should we keep on hand? Should we sell on credit to our customers? How will we obtain any needed short-term financing? If we borrow in the short term, how and where should we do it? So these questions represent just a small sample of issues that arise in managing a firm's working capital. Okay, so these three areas of corporate financial management that we discussed, capital budgeting, capital structure, and working capital management, are very broad categories. Each include a rich variety of topics. We have indicated only few of the questions that arise, and we will discuss them in the chapters coming with more details. Okay. So this is the end of our discussion on learning objective 1. Thanks for listening. And in the next video, I will be discussing the goal of a financial manager or goal of financial management, the second learning objective of this chapter. Okay, thank you very much.